मजबूती। और मजबूती संयोग से नहीं बनती, मजबूती सोच से बनती है। सोच जिससे देश आगे बढ़ता है, सोच जिस पर मजबूत भविष्य खड़ा होता है। हम हैं बालाजी ग्रुप, कंक्रीट टीएमटी एंड स्ट्रक्चर्स। 1988 से बालाजी ग्रुप और कंक्रीट टीएमटी एंड स्ट्रक्चर्स ने स्टील निर्माण के क्षेत्र में लीडर के रूप में अपनी पहचान बनाई है। हम उस विश्वास की पहचान है जिस पर एक्सपर्ट्स भरोसा करते हैं, क्योंकि हम गुणवत्ता में बिना किसी समझौते के काम करते हैं। चाहे रॉ मटेरियल हो या फाइनल प्रोडक्ट, हर स्टेज में इन्हें जांचा और परखा जाता है, क्योंकि हम जानते हैं कि मजबूती से समझौता नहीं किया जा सकता। इसलिए हर बैच की कड़ी टेस्टिंग होती है। हमारी टीम हर प्रोसेस पर रियल टाइम नजर रखती है। हमारा टीएमटी एंड स्ट्रक्चर्स प्लांट आईएसओ और बीआईएस द्वारा मान्यता प्राप्त है। अत्याधुनिक मशीनें, सटीक कंट्रोल सिस्टम और इंजीनियरिंग का अनुभव, यहाँ हमारे प्रोडक्ट्स को भविष्य के लिए तैयार किया जाता है। कंक्रीट टीएमटी एंड स्ट्रक्चर्स मजबूती का सिर्फ दावा नहीं करता, बल्कि मजबूती साबित करता है। जब तक स्टील हमारी कसौटी पर खरा ना उतरे, वो आगे नहीं बढ़ता। हमारे कंक्रीट टीएमटी ब्रांड की मोहर हमारी शुद्धता और आपके भरोसे की पहचान है। कैंपस के अंदर मेडिकल सुविधा, ताकि हमारी टीम हर दिन सुरक्षित लौटे। नई सोच और जिम्मेदारी के साथ कंक्रीट टीएमटी एंड स्ट्रक्चर्स अपनी क्षमता और नेटवर्क को लगातार बढ़ा रहा है। इस साल हमारा लक्ष्य स्टील इंडस्ट्री में बेमिसाल क्वालिटी के साथ प्रोडक्शन के नए मुकाम हासिल करना है। कंक्रीट टीएमटी एंड स्ट्रक्चर्स, मजबूती ही हमारा विश्वास है।
सन 2002 में एक बड़ा सपना देखा गया, एक ऐसे देश का जो हवा से बातें करे, ऐसे शहरों का जो कभी ना रुके, और एक ऐसी कंपनी का जो इन सपनों को साकार कर पाए। और इसी सोच के साथ राजेश अग्रवाल जी, उमेश अग्रवाल जी और रमेश अग्रवाल जी ने मिलकर रियल ग्रुप की शुरुआत की। इस एक बड़े सपने को हकीकत बनाना ही एकमात्र लक्ष्य बन गया। रायपुर में एक रोलिंग मिल के सेटअप से रियल ग्रुप की नींव रखी गई। सौरभ अग्रवाल जी, गौरव अग्रवाल जी, शशांक अग्रवाल जी, बसंत अग्रवाल जी और शिव अग्रवाल जी के साथ मिलकर धीरे धीरे एक छोटी सी रोलिंग मिल बहुत बड़े फुल्ली इंटीग्रेटेड मैन्युफैक्चरिंग प्लांट में बदल गई। आज रियल ग्रुप रायपुर के सबसे प्रतिष्ठित फैमिली ओन कंग्लोमरेट्स में से एक है। हमारे इंटीग्रेटेड स्टील मैन्युफैक्चरिंग फैसिलिटीज में रियल इस्पात एंड पावर लिमिटेड, शिवालय इस्पात एंड पावर प्राइवेट लिमिटेड, एपीआई इस्पात एंड पावर टेक प्राइवेट लिमिटेड, रियल इस्पात एंड एनर्जी प्राइवेट लिमिटेड जैसे अत्याधुनिक प्लांट्स रियल ग्रुप के पास हैं। इन मैन्युफैक्चरिंग यूनिट्स से स्पंज आयरन, बिलेट्स, टीएमटी बार्स, वायर रॉड्स, एचबी वायर, बाइंडिंग वायर, जीआई वायर, बार्ब्ड वायर का उत्पादन करते हैं, जिसके लिए कैप्टिव पावर और सोलर पावर का जनरेशन किया जाता है। हम प्रति वर्ष तकरीबन 10 लाख टन फिनिश्ड गुड्स मैन्युफैक्चर करते हैं, जो जीके टीएमटी और रियल वायर ब्रांड नेम से मार्केट में अपनी पहचान बना चुके हैं। हाई क्वालिटी जीके टीएमटी और रियल वायर बनाने के लिए हम एनएमडीसी का डीआर सेलो आयन और इस्तेमाल करते हैं, जो इंडिया का बेस्ट आयन और है। हम कोल इंडिया लिमिटेड से कोल खरीदने के अलावा ऑस्ट्रेलिया, इंडोनेशिया और साउथ अफ्रीका जैसे देशों से बेमिसाल क्वालिटी का कोल इंपोर्ट करके इस्तेमाल करते हैं। हमारे रोलिंग मिल्स में जर्मनी की एच&के थर्मेक्स टेक्नोलॉजी के साथ ब्लॉक मिल टेक्नोलॉजी, हॉरिजॉन्टल एंड वर्टिकल मिल, सीमेंस मिल ऑटोमेशन और टंगस्टन कार्बाइड रोल्स जैसी एडवांस्ड और अल्ट्रा मॉडर्न टेक्नोलॉजीज इस्तेमाल की जाती हैं। आज हम गर्व से कह सकते हैं कि जीके टीएमटी और रियल वायर ना सिर्फ देश में बल्कि विदेशों में भी अपना परचम लहरा रहे हैं। सबसे उच्च क्वालिटी प्रोडक्ट्स देने के लिए रियल ग्रुप के रॉ मटेरियल्स और फिनिश्ड गुड्स की स्ट्रेंथ, क्वालिटी, केमिकल, मैकेनिकल और फिजिकल प्रॉपर्टीज की जांच वेल इक्विप्ड अल्ट्रा मॉडर्न एनएबीएल अप्रूव्ड इन हाउस लैब्स में ही की जाती है। आज देश और देशवासियों के भरोसे के कारण ही रियल ग्रुप के प्रोडक्ट्स गवर्नमेंट ऑफ इंडिया के प्रोजेक्ट्स के साथ प्राइवेट सेक्टर के लार्ज स्केल डेवलपमेंट प्रोजेक्ट्स में भी इस्तेमाल किए जाते हैं। हमारे सारे प्रोडक्ट्स भारत में इस्तेमाल होने के अलावा यूरोप, वियतनाम, नेपाल, थाईलैंड, अफ्रीका और श्रीलंका जैसे अन्य देशों में भी एक्सपोर्ट किए जाते हैं और इस बात का हमें बहुत गर्व है। हाई क्वालिटी आउटपुट देने के साथ हम पर्यावरण का भी उतना ही ध्यान रखते हैं। हमारे सारे मैन्युफैक्चरिंग यूनिट्स के लिए हमने एक एनवायरनमेंट फ्रेंडली ग्रीन ट्राइब्यूनल बनाया है और पर्यावरण की सही तरीके से रक्षा करने के लिए यूनाइटेड नेशंस ने रियल ग्रुप को मॉडर्न प्लान भी घोषित किया है। रियल ग्रुप की सस्टेनेबिलिटी और एनवायरनमेंट फ्रेंडली जीके टीएमटी के ग्रीन प्रो टीएमटी के द्वारा हम कार्बन एमिशंस कम रखने का वादा करते हैं, जिसकी वजह से हमें ग्रीन प्रो सर्टिफिकेशन और स्टार रेटिंग्स भी प्राप्त हुई है। हमारे फैमिली ऑफिस रियल एंड सन्स के जरिए हम अपकमिंग स्टार्टअप्स, बिजनेसेस, स्टॉक मार्केट्स एंड इक्विटीज में इन्वेस्ट करते हैं। इसके अलावा हमारे रियल एस्टेट वेंचर रियल स्पेसेस के हाउसिंग और अन्य रेजिडेंशियल प्रोजेक्ट्स जैसे वेदा 42, अनंता, द ओल्टेयर और वानिया के जरिए रायपुर में पहले से ज्यादा प्रोग्रेस और डेवलपमेंट देखने मिल रही है। बिजनेस वेंचर्स में अपना परचम लहराने के अलावा रियल ग्रुप के द्वारा समाज के सुधार की तरफ प्रयास करते हुए रियल केयर फाउंडेशन की स्थापना की गई। इस फाउंडेशन के तहत रियल स्किल एकेडमी, जिसमें 12 गांव के लोगों को हर वर्ष उनके स्किल डेवलप कर उन्हें रोजगार दिलाने का प्रयास करते हैं। इसके अलावा वृंदावन हॉल एंड ऑडिटोरियम और चितवन वृद्धाश्रम के जरिए हम समाज में प्यार और अपनेपन की भावना बरकरार रखने की कोशिश करते हैं। हम अब और भी बड़े सपने देख रहे हैं, जहां हमारी कोशिश है कि सबके पास अपना घर हो और उसकी नींव हम रखें। भारत को शानदार स्ट्रेंथ और बेमिसाल फ्लेक्सिबिलिटी देते हुए रियल ग्रुप देशवासियों को बस ये कहना चाहते हैं कि अपने सपनों को जी के देखो। जी के टीएमटी, सपनों को जी के देखो।
Would they will wait for a couple of minutes for Mr. Vinay Agrawal to join and we'll start करके 11 तो बज गए कौन तो है
Good morning, one and all, and a very warm welcome. We are waiting for one of our distinguished speakers, so it may take a couple of minutes. And right after that, we'll kickstart the session for the day. Again, we welcome you all. So I would say happy waiting for a while. Once we have the guest on board, we'll start immediately. Thank you once more for joining. Yeah, but ladies and gentlemen, we have a quick update. In the next 5 minutes, Mr. Vinay Agarwal will be joining with us. There is a small technical glitch from his side, so kindly bear with us, and we'll be starting the session highly possible in the next 5 minutes. Thank you all. Thank you for your kind patience. Again, a very good morning, ladies and gentlemen, and a warm welcome back to day two of the World Metals and Mining Summit. Again, an update. We are still waiting for Mr. Vinay Agrawal. Once he joins us, we will reintroduce him and make him an integral part of the forum. And till that time, all of us had an enriching first day full of meaningful discussions and networking. Today, we continue our journey with a strong focus on the steel industry, beginning with one of its most critical inputs, ferroalloys. The sessions lined up today will explore market dynamics, the future of steel industry, developments in the long products segment, and conclude with a special fireside chat featuring one of India's most respected industry leaders. So let us begin our day two with our first technical session, and session will be on Ferro Alloys Market 2026, demand, trade dynamics, pricing outlook for a growing steel industry. And the session will continue from 11 a.m. to 12 p.m., although we are late maybe by 10 minutes. And as far as the context goes, ferroalloys may represent a small proportion of steel making inputs, but they play a defining role in determining the quality, performance, and value of steel. As it is said, the most valuable elements come in small packages. As global steel production continues to evolve, ferroalloys are witnessing changing demand patterns, shifting trade flows, pricing volatility, and increasing focus on supply chain resilience. Understanding this market dynamics is essential for producers, traders, and steel manufacturers alike. Today's discussion will examine the trends shaping the ferroalloys market and the opportunities that lie ahead for the vital segment of the industry. So let me take the opportunity to introduce the speakers joining us for this discussion are some of leading professionals representing manufacturing, global procurement, trading, and market intelligence. Our first distinguished speaker was supposed to be Mr. Vinay Agrawal, although we are still waiting for him. Going next, we are delighted to welcome Ms. Neha Gambhir, Head Global Purchasing, Million Link China Investment Limited. Joining us with an international perspective, she brings valuable insights into global procurement, international trade, and evolving market dynamics. And our next speaker would be Mr. Harsh Agrawal, Commercial Head, Metals Buy, who has been actively engaged with the ferroalloys market, working closely with producers, traders, and consumers across India. Joining him is Mr. Harsh Baid, Director, Sri Bhagwati Metal and Alloys, bringing valuable experience from the manufacturing and trading ecosystem of the ferroalloys industry. Last but not the least, let me take this opportunity with great pride to introduce the moderator. Moderating today's discussion is Mr. Akindiya Nagpure Consultant Quisro. With his extensive understanding of commodity markets, business strategy, and the steel value chain, Mr. Nagpure is well placed to guide today's discussion and bring diverse perspectives together. Mr. Nagpure, thank you so very much for joining us, and now the stage is all yours. A very welcome, Mr. Nagpure, a very warm welcome. All
Thank you
yours.
so much, Abhishek. Thank you so much. I think good morning, everyone, and thank you for setting the initial context for the discussion. Can we just move ahead with the context setting presentation if you can project it? So just to set over the next 15 minutes, I want to set the stage for the conversation we are about to have with our panel. So ferroalloy is something which we talked about. We don't really talk about as often as steel itself, but nothing about steel strength or its properties from construction to defense work without ferroalloy. So before we bring up the panel and start the discussion, I want to walk you through where the market currently stands, what's driving demand, where India fits competitively, where the real cost structures sit, where the next few years of disruption or opportunity likely to come from. So, starting from the first, we will start with the global picture itself. I think we can start with the second. Yeah, the next one. Yeah. So here we can clearly see that ferroalloy markets is break into the four families. Each one behaves completely differently. manganese alloy, which constitutes ferromanganese as well as silicomanganese, is the volume leader in this case with 45% of the market. They are essentially inseparable from the carbon steel. About 90% of the manganese alloy go into the deoxidization and alloying for construction, infrastructure, and automotive steel. It's a stable business with roughly globally growing at around 3.5 to 5% CAGR, but it's not cost driven and largely commoditized currently. In case of ferrochrome, which is around 30% of the market, 80 to 85% of which is getting into the stainless steel, and it's most power intensive alloy in the world with around 3000 to 3800 kilowatts hour per ton. When we talk of ferrochrome, its economic are a real story about who has access to the cheap, reliable electricity and chrome ore, which was in case of South Africa, which was previously there, but being shutting down around 55 units from past 4 5 years, it took a backseat. Moving towards ferrosilicon, it's around 50% is the universal deoxidizer, have a lower volatility, broader application, and moderate growth. Then we can see the smallest segment by volume, noble and specialty alloys, just 10%, which includes vanadium, niobium, molybdenum, tungsten, titanium, going into the aerospace, defense, EV lightweighting, high strength steel. Here, the numbers worth remembering this 10% of the volume delivers a disproportionate share of,
I'll just ask for your
yeah,
pardon, Mr. Nagpure, for
yeah,
just 1 minute.
yeah,
An announcement from our side. Mr. Vinay Agarwal has joined us. He's on board. So
okay,
while introducing the speakers, I just skipped that part since he was not available with us at this point of time. A very warm welcome, Mr. Vinay Agarwal,
Thank
our
you. Thank you,
distinguished
everyone.
speaker for today. Is the director of Hira Ferro Alloys Limited, representing one of India's leading ferro alloys producers, and he has extensive experience in manufacturing industry and the overall industrial leadership. So we heartily welcome you, sir. And over to you, Mr. Nagpure. You can continue from here.
Please, please. Thank you. Thank you, everyone.
So yeah, I was talking about noble and specialty alloys. So it's hardly just the 10%, which includes vanadium, molybdenum, tungsten, titanium, which gets into the aerospace, defense, EV lightweighting, or the high strength steel, which we are talking currently a lot in Indian space. This 10% of volume delivers a disproportionate share, as I said, of the industry's actual profit because it's on price is on performance, not on tonnage. So this isn't one market, it's four we can talk. Each one has a different growth curve, each one has a different margin story. So in the next slide, can we move to the next one? We will be talking about Indian market, Indian bulk ferroalloy production, which includes ferrochrome, silicomanganese, ferromanganese combined, which accounts for around 95 to 98% of the market. As we can see, it has doubled from FY19, which was around 3.6 million ton, and is projected to reach around 7 million ton this year. This real, this is the real growth. This is not just a post-COVID bounce manganese alloy alone, which is 80% of that particular output. And why this currently matters? India has committed to expanding crude steel capacity to 300 million ton. If that capacity actually gets built, ferroalloy demand in India has a very long runway. And this isn't just a story that plays out over 1 or 2 quarters. It's a multi-year capacity story. So the one question which we are also going to discuss with our panel to get into it is whether Indian ferroalloy capacity is actually being built out fast enough to keep the pace with the 300 million ton ambition which we have, or whether a supply gap is quietly building into the space. Moving towards the slide number 4, where we are going to talk more about the conversation about industry defaults straight to the cost or price. But quality is quietly becoming just as important a competitive lever. This slide is about why that particular thing is happening. The one issue, the things we can divide it into is enablers and issue. The enablers in this case is the BIS certification is being included, ISO certification with full traceability, which becoming a genuine gate into the premium buyer panels. Rapid in-house testing shortens the dispute cycles and builds trust, and ultimately leading to the consistent quality is what converts a transactional buyer into a long-term buyer. It shifts the conversation away from price alone. But on the issues, if we can see, there is an inconsistency which is leading to the real headache, because manganese and chrome ore from the blended import ore swings from 37 to 42% manganese, and that shows up as batch to batch chemistry variation is being formed. The number one cause of which is the number one cause of the customer disputes. Lump size and fines consistency is another recurring or avoidable source of price erosion. Tightening phosphorus sulfur specifications, especially from EV steel and specialty producers, are raising the cost of staying compliant faster than the producers can recover its price. So the question here is quality being treated as a cost line, or it is actually being priced and sold as a competitive advantage? Moving towards the next one, we are going to talk about the single biggest lever in ferroalloy economics, which is power. Ferromanganese, as the example, on grid power at around 5.6 per kilowatt hour, the all-in manufacturing cost out to about $755 a ton. Switch that same plant to captive power at around 4.6 to 4.8, the cost drops to 728 a ton. That's not a rounding error. That's different between a plant that's being a competitive on price and the one that's structurally very much squeezed. And this isn't uniform across India. Power is very much a subjective thing with respect to the state. Industrial tariff range from roughly 4 rupees to rupees 9 kilowatt hour, depending on the state. Two identical plants having same technology, same ore, and completely different economics, purely based on their pin code. So their economics completely dependent on where the plant location is. On top of that, India is still roughly 70% coal based for power generation. So imported coal price swings and fuel cost volatility flows straight into the alloy cost. The effect on this is India is on the price at which it's being moderating. But this volatility can be showed up in EBITDA swings as well, margin compression, or in worst case, the export competitiveness risk. Moving towards the next one, we will be getting into the how Indian ferroalloy industry to look at from how it stack up globally. When we look at the global landscape right now, Brazil, US are domestically focused and not exporting aggressively. South Africa is dealing with an energy crisis, constraining stable outputs in chrome, in case of ferrochrome, which we have seen recently. Ukraine has a conflict-driven capacity disruption. Australia has also not been producing from past 18 to 20 months. In case of Malaysia, Norway, Indonesia are competitive, but already being serving some established trade corridors. Against that backdrop, if we see India stands out on four things: relative stable geopolitics, which makes it a reliable supply partner when everywhere else there is a disruption story. Power cost, that whatever their volatility remains relatively competitive, especially with roughly around 45% of manufacturers on thermal captive power. Strategic proximity to Middle East, Turkey, and Southeast Asia, and the growing steel demand base increasingly pulling towards the specialty steel. And we are already seeing it play out, because we have seen that India's export to Turkey have raised recently, and the trade adaptation is already being underway. So when we talk about all this, we also have to look after the more broader picture of decarbonization, which we'll be getting into the next slide. The last slide before we get into the panel discussion is the decarbonization. This is genuinely a mixed picture, because on case of enabler side, we can see there is a renewable and captive hybrid power is emerging as the logical next step after pure thermal captive power. Early mover on cleaner smelting have a window, not a permanent one in this case, to capture a low carbon premium from green steel committed OEMs. And ESG linked financing is starting to show up as an actual funding cost advantage. On the issue side, we can say CBAM is not just a cost problem, it's the documentation problem for the most Indian smelters, as they are yet to produce verified emission data at the level of what EU will demand in future. Green hydrogen and alternatives reductant technology remains commercially unproven at the furnace scale. Too early to underwrite as plant level blade, we can say. And cross-state power, as we already discussed, that it's been changing throughout from state to state. So this is something, this is a cost win. Medium term, we can see that will lead to some good margin if we are going towards the greener source of energy. But in case of current scenario, we can see there are some constraints which as a industry we need to address. So moving towards the next one, final one, which is just to set the context for the panel discussion, what we are going to have the landscape over there is the global demand mix, what is India's production story, quality as a lever, power, or when we talk about break cost variable. We have structured today's conversation around 6 threads: cost competitiveness, who has actually the edge of pricing and margin, what the numbers are really saying, trade policies, tariffs, protection and distortion, geopolitics and supply chain, digital adaptation, how this trade is being brought and sold differently, and decarbonization. With that, I would like to bring panel on the consideration where we have Mr. Vinay Agrawal, Director of Hira Ferro Alloy, Neha Gambhir ma'am, Head of Global Purchasing Million Link Chain. We have Harsh Baidji, Director of Sri Bhagwati Metal and Alloy, and Harsh Agrawal ji, Commercial Head of Metals Buy. Moving ahead to the panel discussion. First question is for all. I would like to know, as we have seen that global crude steel has been ranging around 1.8 to 1.9 billion tons for last 2 to 3 years. Yet ferroalloy demand narratives here remain bullish. Is that growth being driven by actual steel volume or by rising alloy intensity per ton? And does that change how each of you is positioning for the next 2 years? Would like to know from Vinay Agrawal ji, your point of view.
Thank you, everyone. Well, largely, the markets are very dynamic in nature, and we cannot say our position saying that, any change in price or the buzz around alloy is driven by forces which are non-sustainable. Of course, these are sustainable trends, and these are outcome of real demand which is coming around. So I think there is a structural shift in the consumption pattern of alloys, and it's supposed to be more sustainable than before because we are seeing capacity addition in the domestic market, which is very far faster compared to the global peers. So the only successful capacity addition which is in the steel market which is going on is with the Indian market capacity addition, and whereas the entire global alloy consumption or steel production is very limited for now. So I don't think so. These are outcome of certain behavior driven circumstances, but absolutely these are the outcome of a real demand which is underlying current. I think you're mute, Mr. Nathwar.
Sorry, Harsh Baidji, your point of view, like, from a producer's point of view, what do you think?
Yeah, good morning, all of you. First of all, I'm not a producer, I'm a trader dealing in ferroalloys. But what I think is that It will be a combination of both. If you look at the bigger structure, it will be a rising alloy intensity rather than volume output, because most of the steel producers have shifted their focus in making special steel like automotive AHSS, defense, rail applications. They require special steels which require more volume of ferroalloys, especially low carbon ferroalloys. And if we look into another side, India is currently an exception to the global trend because their target of steel demand is growing by around 7% and thereafter 9.5 approximately. So, as and when we will be moving towards a green steel, the requirement of low carbon ferroalloys will increase, and this will enhance both the way.
Correct. Neha ma'am.
Hello, all. From my perspective, as a global buyer based in China, it's about how steel is being produced rather than how much quantity or the tonnages. So, what quality of the steel the market requires, that is the most important. And Chinese crude steel production has remained relatively stable over the last few years, but the domestic demand has really been shifted to the property sector, which has historically the largest consumer of steel, and has at the same time growth is coming from basically the infrastructure upgrades like renewable energy, electrical vehicles, machinery, shipbuilding, or the high end manufacturing. So I think the Chinese steel demand is approaching a bottom rather than entering another period of rapid expansion. For ferroalloy buyers, this changes procurement is strategically significantly, and we are no longer sourcing only based on price. Today, supply, security, consistent quality, reliability have become equally important. This is my view on this.
Harsh
Absolutely
Agrawal
correct.
ji, is it something that we will be looking from the digital marketplace point of view, that how the market demand is being currently?
Good morning, everyone. I will extend what Mr. Vinay Agrawal said, that right now it is too early to say that we are matching the requirements of the what will be demanded in 2028 or 2030. But yes, in the global perspective, India is having the maximum capacity expansion and in ferroalloys. And when all the capacities get operational, it will justify the requirements of the global market.
Great. Vinay ji, considering India's point of view, when we talk about India's growth story, so India's growth story in ferroalloy will largely be domestically driven, or it will be driven from a point of view what global demand is showing up. So, when we talk about demand story, it is not just from the point of view of what is being produced and what is being sold out, but also in terms of investment which is being happening in the market. So, if you can
There are two
enlighten.
aspects to your question right now. One is definitely that India's current demand story. And if we look at the numbers very cleanly and clearly with our objective to understand how the new investments going to come into the industry and where it will be, then it changes the dynamic quite differently. And the dynamics if we see, there are right now currently three production centers in India. One is Vizag, the second one is Haldia as a two-port operation. In Vizag as a category, Raipur becomes the third market. So primary driver of these imported manganese was always Haldia, which initiated the imports, and then Vizag because that was the subsequent market, which became the dominant and the primary market. Now these capacities, I'll break my answer into eras. So the previous era of alloy manufacturing would largely, rapid expansion into the global markets and the reach out to the global market. So from 2000, let's just say for safe understanding, from 2009 to 2019 era, that was an era wherein, Indian alloys started exploring the export market and started penetrating the global markets and, positioning themselves as a serious contender in the global market. Now, COVID era, I would not discuss because that's outlier numbers. But everything after 2024 have started shifting and started making a different kind of sense. Now, the investments and into the steel manufacturing in the domestic market will become the primary driver of alloy demand going forward, as it is evident. So let's just say, suppose India produces about 5.1 million ton of manganese alloys. That includes the silico-manganese and ferro-manganese, out of which, say, about India produces 170 million tons of steel, right? And so say about 2.1, 2.2 million tons of alloy consumption remains with India and silico-manganese front. And roughly about with the SS and the other production coming around, say about 800,000 to 1 million ton of ferro-manganese consumption will remain. So out of say about 5 million tons of production, 70 to 75% is the consumption of the domestic market. And the export market only contributes to a certain segment of it, which remains at 30, maximum 30% of the entire production volume. What people are not realizing is that this number has shifted from 50-50 ratio to 70-30 already. And this will continue to dominate now. The momentum is parabolic momentum, and this momentum will continue to dominate the Indian steel and alloy consumption structure, which is going hand in hand. So with 70-30 ratio today, where we are sitting in, I only see that the domestic consumption ratio will further increase and it will reach up to 80 to 85% if the Indian steel capacities will be added as what is envisaged, with the 300 million ton of steel production globally in India by 2032, I think, yeah, 3032. So let's see. I mean, these are different times. JPC and government of India, previous governments of India have consistently been saying that India needs 300 million tons of steel production. It's been 20 years for me to hear this. So, but then I think the time has come now. We are seeing this in real time and making. So, uh, how the investments will come into the segment? Well, that will change entirely. The dynamics will not be as what it was earlier. I personally feel that the capacities which were planned port-based will no longer be as relevant as they were earlier in the market, because the growth in production and the numbers will shift from port-driven manufacturing capacities to more strategically competitive environment-based manufacturing in alloy production. So let's see. I mean, these are different times. India is fortunate to be in a growth cycle wherein we have technologies which is far superior than what our other competing countries had. So technologies like electricity segment is disrupting in India, globally as well. Battery energy storage systems are coming in. So we are in a very different, magnitude when it comes to capacity addition going forward. The location is no longer a very important constraint to make a manufacturing setup. So everyone can now think and plan to position themselves close to the customers or close to the raw material source. Both works. It's not, you know, yin or yang anymore. So
And I
both
think
works.
captive power being part of most of the major manufacturers now, so power also won't be the case scenario where that will be a decision factor for states as well, whether we have to put it in Vizag or whether we have to put it in Raipur, because if we have the captive power, then you can manufacture it from anywhere. As you rightly said, that location won't be the case scenario, I guess. So yeah, Harsh
Yeah,
Bhaji,
I
you,
mean,
sorry, please. Yeah,
I mean,
Vinay ji.
Ajinkya, I think captive power, there's a lot of buzz around these captive power capacities and, the addition which will come because obviously scope 2, I'll call it scope 2 because it's not immediately directly first scope which comes into the alloy manufacturing. It comes as a second backward integration, I can say.
Yeah.
So, but the captive power, if we see in India, in fact, not more than say 20-25% of the capacity which is installed and in operation in India is captive. 70 to 80% of the capacity in India is grid based, and that's the trend globally everywhere. Captive power may sound good, exciting, but then it comes with a different set of not only capex but operational challenges and locational and so on and so forth. And with the coming into the regulatory environment wherein today we are only talking about green steel or inputs which is based on scope 1 as per CBAM. But going forward, scope 2 and scope 3, they all will compound these aspects. So all these investments, if you require round the clock power, you'll have to either go with thermal or either we'll have to go with um, solar with battery storage or the grid interface. So I mean, it's the future of ferroalloy cannot be dependent on one kind of power source. It has to be a blend of all kind of power. It can be solar, it can be wind, it can be hydro, it can be pump hydro, it can be battery energy storage, it can be thermal as, of course, as a baseline.
Correct. Harsh Bhaji, your point of view on this?
I think you mute
So,
Harshji.
no, I think.
Am I
Yeah,
audible?
yeah, you're
Loud and
audible. Yeah.
So basically, what I feel is that India have to get ready for the upcoming challenges. As Vinay said that the only the power is not the the challenges we have to face, but regarding that imported materials costly, which is it's getting costly. So we have to take the challenges for the same as well, and we have to get ready for the same because as and when the steel production will increase, we have to cater the demands of, and being raw material, ferroalloys being the raw material of steel, we have to cater their demands as well.
Yeah. Neha ma'am, next question is for you from your seat where you are buying globally out of China. Is China steel demand bottoming out? As you was talking in the intro, which we had discussion about the global steel story. So is Chinese steel demand bottoming out, or has that already changed where you source alloy from? So your point of view on this?
Yeah. I think from any buyer's perspective, the price is always the key point, but it is rarely deciding the factor. The cheapest material is not always the low cost material once it reaches the steel plant. So when we compare the pricing globally, like once we compare the price from India, South Africa, Kazakhstan, or Southeast Asia, I think the landed cost matters the most. So it's not always about the FOB value, it's always the landed cost. So the first factor we can take like consistency of quality and supply. So basically, the steel makers need a reliable chemistry where they can see the cargo coming ongoing for a particular quality, or the sizing is perfect and the reliable deliveries. So even a small variation in manganese, chrome, or silicon or phosphorus can directly affect the furnace performances and production cost. So I think consistency often carries the more value rather than a small price advantage. And the second factor is the supply reliability. Once we look at a supplier can deliver during market disruptions, shipping delays, or the changing in the export policies, long-term reliability I think is the most important, and it is becoming a competitive advantage nowadays. And other factor is like logistics and the landed cost. Once the freight rates, port efficiency, transit time, inventory, and all the custom clearances all influence the final economics. So sometimes a supplier with a slightly higher FOB price becomes more competitive rather than lower logistic cost. And I think nowadays commercial flexibility is another important differentiator. Sometimes it's like payment terms, contract flexibility, or how you are responding to the customer's requirement, and whether they have the ability to support long-term partnerships. So these factors influence nowadays for long-term contracts. Basically, it's also, if you specific look at India, the country has different structural strengths. So Indian producer basically are benefited from strong technical expertise, diversified alloy sector, flexible production capabilities. So, on the other hand, they also faces challenges. Once we compare with South Africa, access to chrome ore is very limited in India, and compared with Indonesia, power cost can be less competitive for basically energy-intensive ferroalloy production. So, I think these factors can put pressure on the production cost.
I think that sums up quite well. Thank you so much, Neha ma'am. Harshji,
Also, I think that
yeah,
currently the factors like consistency of quality and supply, the landed cost, the long-term partnership, the commercial reliability, basically, and nowadays logistics has been equally important. So I think all these factors matters equally.
great. I think next one is for Harsh Agrawalji from Metals Buy. Uh, Harshji, just wanted to know how digital marketplace sits on the real-time transaction data that official trade statistics lag by months. What is that live order data telling you currently about demand right now? The headline production numbers, which aren't yet showing. So would like to know about the current market dynamics for the demand right now.
See, what I can see from the transaction data that the demand remains steady, but the buying behavior has changed. For example, one buyer of mine who used to procure 1000 tons of silicomanganese in the first week of the month, now what he is doing, he is procuring 500 tons in the first week and the rest 500 tons in the third week. So this tells about that the buying quantity is smaller and the booking cycle is shorter, which says that the consumption is not less, but the buyer is meticulously planning finances, inventories. However, with the arrival of monsoon, in the coming 2 months, the demand will be under pressure, which will become normal eventually.
Great. Thank you so much. With this, we will be moving towards second segment where we will be talking more on the cost competitiveness and who actually have the edge. So starting with Vinayji. So Vinayji just wanted to know India have been always being portrayed in a way where it's cost disadvantage versus South Africa on chrome ore and versus Indonesia on power tariffs. Yet export still have been growing in places. So where does India actually holds a cost advantage today, and where it is eroded fast when we talk about the Indian market in the current stage?
Well, I think I do not look into the markets from only that perspective of cost. Cost is absolutely a fact, but that's not what drive competitiveness. Competitiveness is driven by many other different factors, which Neaji has very uh, correctly pointed out. A buyer is focused on A, reliability, B, commitments, and C, agility. So, what Indian suppliers bring onto the table is agility. The producers are very, very agile, and the market as such of Indian alloy production is a very customer-centric market, and they are able to meet out the customer's demand, you know, much faster, much quicker, and much reliable compared to the competing countries. So, of course, when we are going to compare global competitiveness, people will normally think that, power is cheaper over here, raw material is abundantly available over there. But then why aren't those economies producing and adding more capacity, and why India is becoming the capacity center of global alloy production? And the answer is very, very simple. It's about I would not be able to comment on chrome. For manganese alloys for sure. Is that India is a very agile market. So if, for example, Million Link is out to source a material, they would want to select a reliable partner and credible partner, of course, because their commitment matters. But then they would also want to minimize their transactional effort, and want to buy all kind of products they want from a single source or maybe two sources to hedge their position. And that's what makes India very unique compared to the competing economies. India is a marketplace for alloy, and to procure products from a marketplace becomes quite easy and quite reliable compared to the, few of the corporates competing with the Indian market.
Great. I think that sums up really well. But Harsh Bedji, when we talk about competitiveness, we have came across that Indonesia has gone from a negligible player or a less competitive player to a very serious swing producer on cheap captive power and Chinese capital. Is Indonesia now what's your point of view? Is Indonesia now a permanent structural competitor or a cyclical phenomena if it tied to nickel and pay economics and other parts?
See, Indonesia is now definitely a long-term structural competitive advantage because uh, most of the Chinese investors, they have put billions of investments there into the integrated ecosystems, and they have been built some of the integrated parks there, like Moravali and Vedabel, and these are not modular operations. They have massive investment there, and with core port locations, logical structures, robust logical structures, and which cannot be easily downscaled, or cannot be easily relocated or downscaled. So what I suppose is that Indonesia is in a good position right now because they have their own captive power coal consumption, which gave them an edge to for the low cost production. Further, they have successfully expanded into the from rotary kiln furnaces to high acidic furnaces, which gives them an edge, and they have evolved beyond NPI economics, nickel pig iron economics, and currently I think that nickel share market share they have roughly uh, gone from 28% to 65% market share of nickel. So, considering all these parameters, I don't think that Indonesia is now only a cyclical phenomenon. They are growing at a good speed. But some of the challenges they are facing is that uh, some of the Western buyers have rejected their Indonesian products because of the ESG mandates, and some geopolitical tensions are also rising between Jakarta, because they are trying to for the technology transfers, and Indonesia are asserting a greater pressure over the Chinese zones for marginal shares. So considering all these, Indonesia is in a good position. We cannot say that this is only a cyclical phenomenon. They have a good competitive advantage.
Okay, great to know. Harsh Agrawal ji, last question from the segment of cost competitiveness is considering the fact that what do you think of price competitiveness? Is it improving or deteriorating relative to the other exporting origins over the last 10 to 12 months, which you have seen through metals by or point of view? What's your points to add in that particular case? So when we talk about ferroalloy price competitiveness, is it improving or deteriorating?
See, if we talk about Indian perspective, I believe Indian competitiveness is under pressure because of few reasons like higher power tariff and higher magnesium cost and logistics volatility. And the advantage is with countries like Indonesia and Malaysia, where comparatively power tariff is lesser. However, India has always competed on its quality and has a better advantage in regional locations like Middle East and Europe. And going ahead, if India wants to be more competitive, I think better operational efficiency will be the key takeaway for all the producers and lead the market.
Thank you so much, Harji. With this, we will be moving, as we are running short on time, we will be moving towards our next segment for the geopolitics and supply chain. What actually break first? So, Vinay ji, Indian producer depends heavily on the imported ore from Gabon, South Africa, Australia, and imported coke as well. How exposed is our supply chain to the Hormuz style of disruption which happened? And have you or the industry actually built in redundancy, or is is it still that theoretical? What's your point of view?
Uh, well, uh, well, we can absolutely say that the suppliers for manganese ore is largely driven by the global supplies coming from 3, 4 countries, which is concentrated over there, and that will remain so for the coming decade or two for sure. Uh, and with that, the challenge of global turmoils will continue to become pain point, or you can say the function of volatility in the manganese alloys market, and this function will not change very soon. So none of the industry, even the alloys is a small industry compared to what steel is. Even the steel industry cannot insulate themselves with the geopolitical tensions which goes around. So anything which goes on to the Hormuz, anything which goes on to the Red Sea, anything which goes around to, different segments of the trade routes and global geopolitical tension will absolutely affect steel as a manufacturing, and along with steel, manganese as well. And manganese alloys is more dependent on the raw material and the markets. 30% is still exported. So manganese alloy will still be dependent upon these market for going forward as well. So I don't think so. We'll have any clear answer to such challenges, which are beyond the control of one government. It's high seas challenges. So these challenges will remain so. But these are very unique situations, Mr. Nagpure. These situations do not occur very frequently, and these are cyclical changes which is we are going through with these geopolitical tension. We live in this era, and this will absolutely settle down going forward. Once it's settled down, things will be quite different. So these the raw material which is available in India are subject to the Mineral Act, Mining Act, and how the auctions are taking place and how those minerals will be extracted, upgraded, and consumed. So significant inputs of the alloy industry will continue to pour in from the global markets, whether it's Gabon, whether it's Australia, whether it's South Africa, whether it's any other country apart from that. So that will remain so as the dominant factor going forward. But I do expect that these numbers are only going to stack up more and more going forward, and India will become the single largest dominant factor in the manganese alloy market going forward.
Vinay ji, just to follow up on that particular part. So, in the current disruption because of Strait of Hormuz, have we seen any rerouting happening from the exports point of view?
Yeah, yeah,
So,
yeah,
when
yeah.
we talk about
We've seen rerouting happening. We've seen customer canceling the contracts, abandoning the contracts. We've seen customers uh, after making payments are unable to access to their own inventory at the port. We've also seen port inventories being damaged by the act of war and geopolitical tensions. So we've seen all kind of difficulties with these changing times. But
so, sir, how viable will be long-term contracts in this case, considering Indian manufacturers' point of view? So, it will be more spot-oriented sales which will be taking place like in future, or what's your point of view?
well, any geopolitical tension is being accounted for into the market scenario much faster than ever before. So let's just say if the Gulf geopolitical tension started in the month of March, and we are today in the month of July. So it's been what, 4 months?
4 months.
So within 4 months, we've seen things have normalized quite a bit. So the peak challenge was for the first 2 months, and then the second 2 months were the normalizing time period. So, the markets are very fast these days, and it'll become more faster than ever before. And these normalization will keep on continuing going forward. So, these long-term contracts, well, if the customer is based out of a geopolitical tension area, then there are difficulties with those contracts. But then if the customer is not from those specific geopolitical area, then in the long-term contracts, the price and cost are absolutely accounted for eventually. Indexes keep them updated. So I don't think so, as such with the long-term contracts, the challenge is that grave and scarring. Out of 12 months, if there are challenges for 2 months, then the 10 months are fine to move around cargoes.
Neha, ma'am, to take this ahead, if Strait of Hormuz sees any disruption, walk us through what actually breaks first for a global buyers, freight cost, insurance, vessel availability, or the raw material flows like chrome ore or coke. What exactly disruption or the case of sustained disruption will look like?
See, I would say that this disruption in the Strait of Hormuz is not just an oil issue. Actually, it becomes a global supply chain issue, wherein you see the freight cost almost rise immediately. Shipping lines react to the geopolitical risk within the days. So, war risk premiums are added in the freight cost. Vessel may need to reroute, bunker fuel prices on the other side increases because the crude oil price increasingly significantly. So even the cargo that is not moving through the Strait of Hormuz becomes more expensive to the transport because global freight markets are interconnected. So this is one of the major factors for that. And I think the second comes the insurance. Marine insurer, I think they increase the risk profile of that particular region, wherein war risk insurance premiums can increase drastically. In some cases, the insurers may require special approvals before the vessel enter the affected area. Some of in our manganese ore vessels we have faced this from Gabon. So these additional costs are ultimately, I think, passed through the supply chains only, and ultimately are putting on the cost of the end user. And third is the availability of the vessel. Some ship owners simply avoid high risk regions, others they wait until the security conditions improve. So this reduces the number of the availability of the vessels, and it creates a congestion basically at the alternate load ports or extends the transit times. Wherein if the voyage time is 30 days, it will take 45 days or the 50 days. And even the buyers sourcing from the countries outside the Gulf, they feel the impact because the vessels are tied up for the more longer periods. And the most critical impact on the raw material flows, like for our industry, this includes commodities such as chrome ore, metallurgical coke, manganese ore, ferroalloys, and other steel making raw materials. Inventories at the steel plant and alloy producers, they begin to tighten if the shipments are delayed or the for the several particular weeks. So once the inventories will fall below the operational requirement, the production schedules become very difficult to maintain for all the plants. So from the buyer perspective, physical availability becomes a bigger concern. High prices can be managed, but if material is simply unavailable, customer will face the production interruptions. So that is why companies increasing focus on supply chains rather than low cost sourcing. So securing, I think, flexible shipping arrangements, building a good relationship with multiple logistics providers, don't rely on the one logistic provider. In my experience, companies that perform best during geopolitical disruptions are not necessarily those that buy at the low prices. Those are who have been more diversified and resilient supply chains. So I think in today's market, resilience has become an important factor rather than the cost competitiveness. This is my view on this.
Thank you so much, ma'am. Abhishek ji, do we have 5 minutes to take two questions and then we will close this session? Will that be okay? We are running out of time actually, so would like to know.
Yeah, absolutely fine. Please go ahead.
Yeah, so just last two questions which we are going to take from the whole panel. So in just one sentence, wanted to know all of your point of view. What is the single biggest risk to your business over the next 3 years, what you see that isn't being talked about enough at conferences like this one? What is that single biggest risk which you have seen in the next coming, considering the next 3 years? Vinay ji, if you can start. Sorry, I think you're on mute.
Sorry.
Vinay.
So I don't think so that there's one single biggest risk I can, uh, carve out, because risk in alloy manufacturing, specifically, I'm talking about manganese alloy manufacturing, is multidimensional. Some of it we've already covered, which is largely dependent on the imports. That's a very big risk. India's, the country's inability to, um, liquidate its own mining assets within the country, and upgrading their quality beneficiation of the raw material, which is itself within India, is a risky position, absolutely. So when we talk about from the context of self-resilient market, then from that context, the single biggest risk remains that India's inability to have their own raw material for all our production and continued dependencies on the 3, 4 countries only, makes things worse because one challenge, suppose a typhoon hitting Australia and shutting down one mine in Australia. So, well, if that mine's off, we see a sudden turmoil in the entire market. If a port in Gabon is not performing, we see turmoil in the market. If Transrail is not performing in South Africa, we see turmoil in the market. So these are these are not a welcoming factors. These are supposed to be hedged and strategically should be covered. So India's single biggest risk remains that the metal dependency on import sources is continued and is a prolonged structural requirement of the alloy industry in India. That's the
Harshi,
single biggest risk.
Harshbaji, your point of view on this.
Uh, what I suggest is that it can be taken both ways. See, India has to get ready for investing in technologies and energy efficient, because the next phase of competition will be not on only on the capacity alone, but it will be dependent upon the cost, productivity, and efficiency. So we should focus on energy efficiency and inventing new technologies so that we can cater to the low carbon requirements.
Harsh Agrawalji, your point of view, please.
If I look at this question from the point of view of an aggregator or a digital marketplace, risk will not be the right word for me. The biggest challenge would be that ferroalloys industries is relationship driven when it comes to procurement and sales. So how do we move the buyers and sellers from that mindset to a technology driven mindset? How much time will it take me or anybody else? How much time will it take Metals Buy or any other aggregator or marketplace is going to be the challenge or the question that needs to be addressed. But if and when that happens, it will be a win-win situation for the buyers and sellers. That's what I strongly believe.
Neha ma'am, if you can add something.
I think, as per my perspective, I think the single biggest risk over the next 3 years is not the price volatility or the freight cost. It is the growing mismatch where our raw materials are being produced and where the future demand is growing. Speaking from a perspective from a company wherein we are supplying Gabon manganese ore to India, we see India is becoming one of the fastest growing steel markets in the world. Steel capacity is expanding rapidly, and with that, once increasing demand for the manganese ore and the ferroalloys. The challenge is that developing new mines take many years, but while steel capacity can be added much faster. So, if investment in mining and logistics does not keep in pace, we could face structural shortages of the quality manganese ore, not just temporary, but I think it will price will spike out. Another risk I see, it is often underestimated, is supply chain concentration. Too much of the industry still depends on a limited number of mining regions and the shipping routes. And the last one is the infrastructural bottlenecks. Having ore in the ground is one thing, but getting it efficiently from the mines to the port and then to the customer is another challenge. Rail capacity, port handling, and vessel availability will become increasingly important as the demand grows. So, the next competitive advantage will not just be owning the resources, it will be ensuring those resources can be reached to the customer significantly and consistently in the coming years, so that security of the supply will just as valuable as the competitive pricing, especially for the fast growing markets like India.
Thank you so much, Neha ma'am. Thank you so much. To sum this up discussion, thank you so much all panelists for your time and giving this insightful points to discuss over 1 hour which we spent together. To sum this up discussion, what I can see is that Indian ferroalloy industry is going through a structural shift in ferroalloy, with the low carbon is being the prominent shift which we can see. And Vinay ji has rightly said that there has been some changes where we can see that domestic market likely to get more traction than the export market. So when we see these structural changes, would like to see in upcoming years how the ferroalloy industry cope up with the export as well as the domestic demand, considering the low carbon demand which is also being generated through the um, international or the global pairs. Thank you so much for your all time. I will give it to Abhishek ji to take it ahead. Thank you so much.
Thank you so very much. It has been a virtual platform for perpetual excellence. With the combination on one and all, it has really converged and transitioned into a great session, and the takeaways are going to be permanent for sure. So, on a formal note, thank you so much, Mr. Nagpure, for moderating such an insightful discussion. I also extend my sincere appreciation to Mr. Vinay Agrawal, Ms. Neha Gambhir, Mr. Harsh Agrawal, and Mr. Harsh Baid for sharing their valuable insights and perspectives on the evolving ferroalloys market. Today's discussion highlighted the importance of resilient supply chains, informed procurement, global trade dynamics, and market intelligence in supporting the continued growth of the steel industry. So, my heartfelt thanks to all our speakers and delegates for being a part of this engaging session. My heartfelt gratitude and thank you so very much.
Thank you.
Thank you,
Thank you.
everyone.
Thank you so much, Ram.
Thank you, final
Thank you for your
finalists. Thank
time.
you.
Thank
Thank
you.
you,
Thank you.
everyone.
Bye.
Bye.
And just here from, we are going to transition to the next session. So, as India continues its journey towards becoming one of the world's largest steel producing nations, the focus now shifts from raw materials to the bigger picture, the future of the steel industry itself. Our next session will explore the opportunities, challenges, and strategic priorities that will shape India's journey towards the year 2030. Please stay with us as we begin our next session, and we'll be starting it in the next 5 minutes. The topic being Steel Industry Outlook 2030, Growth, Demand, and Competitiveness. Again, thank you, one and all.